With Allan Small, we're looking ahead to tomorrow's jobs reports, both in Canada and the U.S. And for stock market investors, one of the realities is the U.S. jobs number that has more influence on stocks, including really Canadian stocks, than the Canadian number. The Canadian number is crucial to what the Bank of Canada might be doing, of course. But what is your take on how the market will look at the U.S. jobs report tomorrow?
Yeah, so obviously the first big number for 2025, even though it's a December number, but it is our first big number. And that right after that, next week, we'll get the PPI, the CPI, retail sales out of the U.S. So a lot of data coming our way. And obviously the market is, I think, concerned about this recent tick higher in inflation in the U.S. We're seeing headline numbers in around 2.7%, core numbers in and around 3.3% on the CPI. So the jobs data will be crucial, right? We saw, some already employment data yesterday out of the U.S., the weekly jobs situation, showing a pretty good number. I think that sweet spot. So it'll be very interesting to see what comes out of the jobs data. We know that last month jobs grew by about 227,000 in the U.S. In October. We saw obviously a low number, but that was due to a lot of the storms that went through. So September was a good number. November was a good number. What will December tell us? I think that will go a long way as to what the Federal Reserve is thinking, right? If they're seeing strong jobs, then they may not have to cut rates at all, or maybe only once or twice next year, or this year, I should say. So it'll be a very big number. And then, of course, next week, perhaps even bigger with the inflation data.
The number to keep in mind is 165,000 jobs added to the U.S. economy during the month of December. That's what economists expect, according to Bloomberg News, which has surveyed economists. That would be a slowdown from the 227,000 added in November. Average hourly earnings, however, expected to come in at 4%. That's a number that potentially could add to inflation, correct?
Yeah, absolutely. And again, this is all the data that the Fed continues to look at. We already had some pricing numbers in the last week or so coming out of the U.S. Again, looking strong, pricing going higher. This is all weighed in. I don't think the Fed is going to be raising rates anytime soon. I know there have been some talk about that this year if inflation continues to edge higher. I don't think they're going to be raising rates. I think there's a lot of pressure on the Fed from President Trump when he comes in. He wants to see rates cut. We may not see the cuts, but I don't think we'll see the raises. I think you're going to see a lot of pausing this coming year. And, what kind of pressure is that going to put on the Bank of Canada, right? Because if we see a weak number, Canadian jobs number, will the Bank of Canada be so quick to cut rates here? Because what will that do to our dollar? Our dollar is already at 69.5 cents. Could we see a 68 cent, 67 cent dollar, which eventually could be inflationary for us?
Yeah.
So I think the Bank of Canada has a much more difficult job even than the Fed, because they have to take into account what's going on down south, what's going on with the new administration coming into office on the 20th, and then set policy here for us. Very, very difficult job.
I've spoken to a couple of currency experts recently, and they think the answer to your question is yes, we could see a 68-cent dollar or a 67-cent dollar on this differential in interest rates. That's the driver of the exchange rate, the gap between Canadian rates and U.S. rates. The number to keep in mind for Canada tomorrow is 25,000 jobs added to the Canadian economy during December. As always, we qualify that by saying it is a notoriously difficult number for economists to predict. Very often, we get a number that is completely at odds with the expectation. What is likely to track closer to expectations is the rate of unemployment, which is expected to tick up to 6.9%. So, we've really seen a dramatic increase in unemployment in this country over the past 18 months or so. It wasn't that long ago. We were at historic lows at sub 5%, and now the rate of unemployment is almost 7%.
Yeah, and that's a concern for the Bank of Canada. And it's strange because we grew jobs, 51,000 jobs were created last month, yet the unemployment rate ticked up to 6.8%.
Because the workforce is growing.
That's right. And again, a lot of immigration coming into this country, and on a per capita basis, going back to growth, on a per capita basis, many believe that we've been in a mild recession for quite some time because we haven't seen the growth. Most of the growth we're seeing is just because people are spending money. Those immigrants coming into our country, another couple of million over the last few years, they're spending money, and that has helped keep our country out of a recession.
That is Allan Small and his take on